It's Wednesday, it's the middle of the week, Wednesday, August the 5th, and you can see that the McClellan oscillator pulled up a little bit, but you have to admit now that we're in a channel. So what is it going to do? Is it going to break higher, indicating that there's more money moving into the market? Did you hear Jim Cramer this morning? I don't listen to Jim Cramer. Haven't done that in probably 10 years. But I do see the headlines, can't miss the headlines. And he's saying that he can't believe that people are still buying at this point, and he's blaming it on the traders like you and me. I'm not buying, but it seems that people who are staying home and trading are driving this market higher. But are they going to be smart enough to get out at the right time? So let's look at the volume today. The volume, pretty much in line with the last 2 days, no change there. A little bit more on the advancers, a little bit more on the decliners, not a lot of difference. This chart that I've been showing, which shows, these gaps in here, I explained what these numbers are, but I won't explain them tonight. I explained them a few times. I'll do that the next time I show this chart. But when you see these gaps in this chart, at least this time here, it meant there was a foreboding for something that could happen, some weakness. Well, you're not seeing that now. I thought you might be when we were in here, but we're not seeing that now. So we're actually seeing some strength in these blue bars, which are advancers and decliners. I'll explain it some other time. But usually when you see that kind of strength, the market is stable and moves up when you see a lot of the blue bars. So let's now look at the charts. We've been looking at Fibonacci's, and we looked at our three big charts. Where are they? The market's right here. So we're looking at the S&P 500. Look at that. Came close to closing the gap, but not quite. If we expand this, do we see it actually closing the gap? Let's see. Well, there's always some controversy about where do you draw the gaps. If you include the tails and the candles, the wicks, then we did close the gap today, which would imply that there's going to be some resistance. But you have the pull of the 100%, and then you have the pull, or the push rather, of the top of the gap, which could signal some downward motion. So that's the S&P. If we look at the Dow has popped out of its gap, which it tried to do several times in the last 2 weeks, but wasn't able to today. But what did it hit? 78.6%. Usually when we see a stock passing 78.6% and coming back to test successfully and finding buyers at that point, we're pretty sure that it's going up to 100%. Going to move that ratio because I don't think it's very important. We usually see it trending in that direction of 100%. So is the Dow Jones going to make a double top before it meets serious resistance? That's what we have to ask yourself. Now the NASDAQ, which is continually making new highs, made new highs today. But you remember these two Fibonacci's that we drew. Yesterday we drew this 150% fib and a 138.2% fib on two separate waves that I explained in the video yesterday. And we're getting up to that point. So we've created a gap, and we could come down to test it and fill it after we've hit this coincidental. When you see two waves that have Fibonacci's, key Fibonacci's that coincide, you know that there are traders there. So I would create an alert there, and I would want to know when it hits that value. So now let's go and look at some of the other stocks. Apple got downgraded by Bank of America today, but that didn't seem to matter. It pulled back a little bit at the beginning, but, oh, come on. There we go. But what we're forming here is a little bit of a pennant, a bull pennant, which means you've got a flagpole like this, and you've got some channeling between these highs and lows that should chatter in the next few days, and then the pennants will typically break. Bull pennants will break to the upside. Bear pennants would break to the downside. So we're going to look for more upside for Apple, but that's not going to happen until it sheds a little bit from its ex-dividend on Friday, and then next week you have the split. So it remains to be seen what will happen. Caterpillar up 345. We're looking at the weekly chart, but we're looking at this resistance line. And you know that I'm short the November 130s. So I'm pretty happy with Caterpillar chopping like this up and down. And I'd like to stick with under 135 for the next few months. Now, Home Depot, earnings are coming up in the next few days, I believe. Double check it. But we've also shown that this resistance area is continuing. But today we finished at the top of our range. So whatever loss it was making, it recovered that. And now it's finished at the top for this hammer. This is like a nail with a hammer on top. And we should look for the hammer driving the nail down. So a little bit of resistance. Combined with everything that's happening in the marketplace in those three markets, you know, has it topped? I bought more AT&T today. I just bought 60 shares to round it out to 1,400 shares that I own. It's a 7% dividend. I'm retired. I'm quite happy to hold a stock that's fairly stable, but giving me a 7% dividend. The banks, well, let's look at Whirlpool first before we go. Up $6.26, almost 4%. Look at that, hitting the 78.2. So this shark pattern, which I was suspicious of because I don't really like shark patterns, looks like it's heading towards 216.46. You know, if the market wasn't overbought, I'd be buying. It's going to get there, but remember that Whirlpool can fall below this 68.1 and still be in this shark pattern. So wait, there may be a pullback. Let's look at the banks. The banks had a good day today. Bank of America up 1.5, Goldman Sachs 1.4, JP Morgan 1.7, Wells Fargo 3/4, Bank of America 1 3/4, and whatever this is for Citigroup. So the banks had a good day today. One thing I do want to show you is let's take a look at Finviz. Here's something that I'd like you to look at. And Finviz shows you the one-day performance of the stock. So you can see strength and weakness in the different sectors. Here's the technology sector, communications, consumer cyclical, financials, you know, had a really green day today. But let's look at a 1 month performance. Financials still strong. Let's look at a 3 month performance. Financials still strong. Technology still strong. Everything is still strong for 3 months. Let's look at a 6 month performance. Now we see a little bit of a difference because 6 months included the COVID, and we saw the financial stocks that were hit, industrials, healthcare. The consumer cyclical did okay. The technology did okay. So the difference between that and the 1 month performance is pretty stark. So keep an eye on this and keep looking at it from a daily, weekly, and look for changes. So there's your daily performance. If you're looking at the financials, let's look at the financials now on a weekly. Not as green. So today was better than their weekly average. Let's look at it again. There's the, let me see if I can bring that into focus here. There's the financials. We may be able to just I thought we could just blow up all the financials. No, we can't. So there's all the financials are pretty green for the day, but the week, not quite the same picture. And the month, green again. So it tells you that the financials are returning back to the performance of a week ago. So take a look at Finviz, take a look at this consumer cyclicals thing, and look at sectors that are weak as an opportunity to buy into. That's not the kind of trading I do, but it might be something that is of interest to you.